So on the program, we're talking about what has been an increase in the amount of scams involving people taking money out of their retirement accounts to pay a scammer. And then not only have they lost money, but then they created a tax bill for themselves. So much so that this has actually finally got some interest out of the folks in Washington, that special Senate committee that was established to kind of look at this issue a little bit more.
Mm-hmm. Yeah, so it's trying to avoid that double hit for these scam victims. So they pull the money out of the retirement account, it's scammed away from them, and then the huge IRS tax bill comes on April 15th.
One of those unintended consequences when the tax changes that happened in the past eliminated the ability to write off a loss like that, a theft loss like that, where you no longer have that option. So it's interesting that they've actually talked about making a change retroactive all the way to 2018 to help victims of scams. But the far better strategy is to try and avoid a scam in the first place. So we're talking about, we were talking through in the last segment, Kristin, about some of the signs of a scam and then what you can do to avoid it. By the way, if you're a regular listener to the program, make sure you check out our Facebook, because we actually posted this on our Facebook, kind of a summary of the signs of a scam and what you can do. So look for us under Nelson Financial Planning on Facebook, and you'll also see this as a document as well. So what else is kind of some of the signs of the scam besides the ones that we were talking about before the break?
Mm-hmm. So if somebody asks you to wire money, that's usually a scam sort of thing.
Right. Or Western Union, same kind of concept. Yep.
They tell you don't hang up.
Right.
So they want you to act right now. Right.
It's kind of like if you get a fish on the line, and you don't want the fish to go, so you just keep hanging on. Okay. And the more you can keep the fish on the line, the more likely you are that you reel the fish into the boat, which is the whole point of what they're trying to do.
Exactly. And then they also ask for confidential information.
Right.
Yeah. And then what you can do to avoid these, or if you are part of a scam, or if they called you and you're in the middle of this, what you can do is slow down, write down their information, and just make sure you don't give any of your identifying information out. So there's nothing wrong with writing down the phone number, doing a Google search, writing down their name, doing a Google search, and just kind of slowing it down a bit. That's
solid advice whenever you are confronted with somebody that has a threatening tone, that is telling you must act quickly, you must act with urgency, don't tell anyone. If you slow down, then it really does help to really maybe see what actually is happening before it happens to you.
Mm-hmm. Yeah, and then also just tell somebody, call somebody that you trust, whether it be a family member, sibling, your spouse, your financial advisor, just somebody that you can talk to, explain the situation, and get a second opinion on whether you think it's a scam or if it's real. So kind of just getting that second opinion on it.
Well, and it's so important. Look, there isn't anything out there that at the end of the day you are going to be legally required to not share, right? I mean, you can share whatever is happening, particularly with a trusted individual, and ultimately discuss that. Now, this other item that we were talking about earlier, Kristin, involving sort of the other scam, or what became a scam, the employee retention credit. This one is a COVID era one. We were talking about it earlier in the program, where it was designed to help employers who kept their staff paid, even though their businesses were closed during sort of those early days of COVID. But ultimately, professionals, or I guess professional scammers, came into the mix and encouraged many more businesses to do that were not really eligible. And Kristin, the IRS is kind of turning the page and going after people on this thing.
They really are. There's so many of these ERC mills, is what they call them, that has taken advantage of this. That, I mean, the IRS has opened 460 criminal investigations, which means potential jail time for some of these scammers. They've rejected over 28,000 business claims so far, which has saved the IRS $5 billion. So these numbers are incredible. And the IRS has identified about 30,000 fraudulent refunds that they're trying to claw back, meaning they've already issued these out, but they're trying to go after these companies and get the money back from them.
Yeah, and so consequently, we would urge you, if you were victim to one of these ERC mills, to really take a look at what was filed. There is some opportunity with the IRS showing a little bit of grace here, whereby you can pay back only 85% of the credit, because typically these ERC mills took 15% as sort of the normal cost. So an opportunity to kind of make it right and have it not necessarily cost you anything out of pocket beyond the amount that you got. But you really got to take advantage of that, because I don't think that deal's going to be there forever.
No, it's just through November 22nd. So
okay.
Couple more months.
Yeah, deadline is, clock is ticking. So if you go past November 20th and the IRS comes a knocking, they're not going to be quite so forgiving on that.
No, they're probably going to assess interest, penalties, so above and beyond that balance that they sent you.
So that's an important date for our listening audience to know. If you've got a business, or if you know somebody who had a business that might have taken advantage of this or filed and got a big refund, you really want to tell them to take a second look at what was filed on their behalf, because after November 20th, because it's basically been about a year where the IRS has kind of had this deal where you couldn't send the money back in and, hey, no harm, no foul, you got scammed, so we understand. But after November 20th, good luck.
Yeah, and with these, I think it's important to remember that when they were contacting you, these ERC mails were claiming that you had nothing to lose, that they would file this ERC credit for you, and that you would get this refund, and they would just get a portion of it. So you didn't pay them anything out of pocket. You really, in theory, they were quoting you had nothing to lose from this, when in actuality, the IRS is imposing all these interest penalties. So if you did submit one of these claims and you think it's fraudulent, it might be a good idea just to withdraw that claim.
Indeed, that might be a good idea. And I guess we put that in the category, if it sounds too good to be true,
Right.
probably is. Anyway, speaking of things that have changed a bit, we'll shift gears and talk about Secure 2.0. Now, this legislation, Kristin, was passed about a year and a half ago, but a lot of the stuff in it really hasn't come online hardly at all at this point.
Right, we're seeing a lot of it that it should have been available last year or this year. It's just the reality is it just hasn't come into effect yet.
So these retirement changes that are coming, the legislation that was passed, some of them are widely discussed, but others are. A couple of them actually popped up that we were talking about this past week as we were prepping for the show, that even I wasn't really totally aware of in terms of what was in that big old piece of legislation. Some of the more widely discussed ones, but there's also some lesser known ones. So we'll talk about that, because Kristin, there's basically this Roth push, if you will, inside the Secure 2.0. So let's talk a little bit about what that means. Yeah,
so there's some proposals in this that have come into effect that really are pushing for Roth, which would kind of generate more IRS revenue now. So the Roth push is you pay the taxes now, whereas the pre-taxes, you pay the taxes in the future. So one of the pushes is, the first one is there's no more required minimum distributions from Roth 401ks. This is something that probably should have been enacted years ago. So there were no required minimum distributions required from Roth IRAs, but the 401k Roth had this little loophole that required them. So what they've done is kind of made it even across the board. No required minimum distributions for Roth 401ks or Roth IRAs. Sort
of harmonized, if you will, what makes sense from a rule, because a Roth doesn't have a required minimum distribution, but now finally Secure 2.0, a Roth 401k also does not have a required minimum distribution. So just one of the things that is in it. Besides that, we got three other things that we want to share with our listening audience, plus a couple of those lesser known changes to your retirement account. So we're going to talk about that in the next segment here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your one of Central Florida's longest-running radio programs, also a top 25 financial podcast. My name, of course, is Joel Garris. With me this week is Kristin Kalley-Castello of Nelson Financial Planning. Stay with us through the break, and we'll continue the conversation on these changes to your retirement accounts.